Hey guys, welcome to my channel. This is a Bitcoin update, or more specifically, a cryptocurrency market update. If you just landed here, do me a huge favor, drop a like, hit the subscribe button. It's all for free. That would be greatly appreciated if you do something like that for me. I just was over this Professor Keith guy on Twitter, and I was reading through his analysis. I made a comment. I said, hey man, that's actually a pretty decent pretty good analysis, and I agree with him and everything right here. So what I'm going to do, those who don't know, I guess you can go over there and follow him. What's going on? He's going over Bitcoin right here. He's doing a historical analysis and from a data point using past analysis and also using present indicators of the RSI and the MACD to come to a conclusion that he thinks there's a possibility, just like I've said, the bottom is in on Bitcoin. So some Bitcoin, I'm going to go over some Bitcoin historical data for you in thread form right here. He said right here, using the weekly high time frame chart for the historical 9+ year trend that started all the way back in April of 2013. Okay, so he's got that data. We see a nice weekly 200 MA formed. Historically, BT hasn't stayed under it for very long, 7 weeks twice. He's talking about the 200 MA here. It's good. Using the same photo, we can add what happens before and after it touched the 200 MA line. The confluence is shared with halvings listed in a date in green, yellow, blue. Halvings are vertical red lines, as you can see, cyclical. Okay, makes sense. What does this tell us? Press tells us that after a midway touch yellow, we have run to resistance blue. From there, we retrace for either another trend or 200 MA retouch pink. This is historical after falling resistance red line. So he's talking about that. So he's talking about going up and coming back down to touch it again right over here. Trends tells us while the chart is moving up, it's likely not time to count your chickens. So you see, he's optimistic. He's to me, he seems like he's a trader more than anything. So he's looking for the patterns and stuff. So if he's looking for patterns, he's probably a trader. Now here's the thing. He's cautiously optimistic, just like I am. Is the bottom in? Don't know, not 100% sure. I'm erring more towards that it is. Not because of this data, what he's presenting, I have other data I'm going to present right after this. So the next happening is till May 22. So far, we are halfway to go, 50% from last happening so far. A possible rising wedge on a huge scale is forming, okay? So, and then he goes over it a little bit more using the not the MACD, but the RSI, which is like RSI first. Historic precedent also reigns supreme here. After an oversold condition pink and overbought conditions happens green from there. Historic top and bottom lines are tested. We are currently barely above oversold. Okay, good. Here's the current weekly position still under the white trend line as shown. If we can break through this, it sets a potential run to overbought. We make money. However, we need to wait a bit longer for confirmation before we get our hopes up. Careful, right there. You see? Right there. This guy's smart. You see that, guys? This is what I stress. You always have to have that bearish, the bearishness in the back of your mind, just in case. So what does that mean? If you have that in the back of your mind, you're going to have some risk mitigation strategy. Either you're going to say, okay, where do I drop out of this and just say, forget it, it's done type of deal. Where do you set your stop losses or anything like that? Where are you going to sell? Where are you going to get out? You have to have that to save your bag, okay, from going down 90%. The MACD shows a similar report, though easier to see. Simply, MACD has never been this low before, and the previous lowest ever crossed up shortly after and moved into a more bullish scenario. MACD has already crossed up a couple weeks ago. Good. Conclusion, this narrative shows that we may have already hit a bottom, and if we haven't, the president isn't there to say what's going to happen. By the data, it's following along all as previous, so I'm assuming that continues, okay? So personally, that right there, guys, based off the data, what this Professor Keith on Twitter has presented, that is a good analysis, in my opinion. That's a good analysis. So he's saying, here's the probability, but you know, be cautious. So he's like me, probably. He's turning bullish, like what I've been doing with Bitcoin. I was up here, down, bearish, Now I'm flipping and going, this is probably the bottom forming process for Bitcoin. Okay. And the reason I am becoming more bullish and that there's likely a bottom that is here on Bitcoin is because of the other data, such as Binance coin right here, that I think it has finished its bottom. That was Binance, in my opinion. I'll say that was Binance bottom and it's on its way up. If Binance is doing this, guys, I mean, if I'm pretty sure that Binance is doing it, more than likely, you know, Bitcoin probably has a bottom. Could it have one more low and then get out of there? It could, but you know, I'm starting to go more towards it. That could really be the low for Binance. Ethereum is the same way. The bottom is here. It's reacting off that bottom really good. It'll come down and it can whiz back up into those areas too. So, and then if you want to go to like say some altcoins, and this is like looking at the bottom on altcoin for here, Polkadot, which I just did a video on. You know, this is a nice little move off the bottom in a leading diagonal. Your traditional technical analyst will call that a rising wedge, and they'll say, that's just bearish, that's just bearish. Here's the difference, okay, between these moves, guys. This is what your chart pattern traders are doing with Bitcoin, okay? I'll show you. There's a big difference between a rising wedge, okay, and these patterns like this, guys. There's a big difference between those patterns like here, okay, that you have these patterns called bear flags, okay, and the bear flag breaks down and this flag breaks down. Your first cue right here was on this one, okay. This right here was your perfect short setup right there, because that's a wave 1, 2. That was your 2. That was your cue right there for your short setup. This one right here, okay, in this area, it came down, and then right there was your short setup. And then at the top of there was your short setup over here on those, okay? Now, this is different, guys. This is a bearish, short-term bearish sequence in a rising wedge, and they do break down. But with Elliott waves, these can be motive waves, kind of like Polkadot over here. 1, 2, 3, 4, 5. It's a motive wave. I'll show you guys it just landed here. Just subscribe to the channel. I'm going to go to a chart. You see motive wave diagonal for Elliott wave. And you can see 1, 2, 3, 4, 5. They're compressed motive waves, just like what DOT has going on right there, guys. Okay. You see the similarities between that wave and Polkadot's wave? So why am I going more bullish towards Bitcoin and there's a potential bottom and it's not going to swing down and make that low? Is because the other assets are springing out, making a bullish sequence off their bottoms right now too. Are all of them? No, not all of them, but a lot of them are. But particularly the big ones, Binance and Ethereum. And if you go back to the history of Bitcoin coming out of the bear market, everybody pays attention to Bitcoin, and they don't throw Ethereum under the bus, but they throw Binance under the bus. And I think that's a big mistake, because you get a lot of clues from Binance coin, guys. And right over here, coming out of the bear market, made a previous video about it. Which two coins blasted out before Bitcoin? Binance did right here 2 weeks before, and Ethereum did 1 week before Bitcoin did. As a matter of fact, Binance was already up 300%. You got a 3x out of Binance before Bitcoin even went past this high again for a period of, what was that? 71 days, almost two and a half months, guys. So what do you think the odds are something similar is going on over here, guys? Okay. So here with Bitcoin, I have the more conservative diagonal. Okay. You're going to see some other people with some 1, 2s, 1, 2s, 1, 2s, 1, 2s. And if that's the count, guys, then Bitcoin's coming down to this box and it's going to shoot out of here and be at 30,000 within, just real quick. I'm not going to go down that road. I don't think it is. I think Bitcoin is just very weak and slow to start off of its bottom. I think that's what's going on. It's in the cryptocurrency market, it's huge. It's what, $500 million. It takes a lot of money to get this thing going. You know, not quite as much as Ethereum, even though it's half the size. And then Binance, think about it, guys. Binance is like 50 billion. It is 10 times smaller than, when it comes to market cap size, more or less than Bitcoin. So it's kind of like, oh, can I go? Can I get up there? I can't. Okay, I made it. And I'm going to come down and correct a little bit. And then maybe finally, you know, it can swing back around and then finally get out of there and start making some more aggressive moves from out of this area or wherever it may correct to. I did a video on that if you want to know the possibilities of it correcting. So it could just be a shallow correction. You have to be aware of that too. But my plays for this coming FOMO wave for me are not going to be in Bitcoin. I mean, just alone, you'd be better to be in Ethereum. You make more gains. Even Binance Coin, you'll make more gains. Quant, you'll make more gains. DOT, you'll probably make more gains. The laundry list of other coins to make more gains are out there. Of course, they're a little bit more risky, but you know, if you know how to read the charts a little bit and use a little bit of common sense, that hey, these charts are telling me that there is a tide turning right now, guys. The tide is turning in the markets, in my opinion. And the reason I'm calling it a FOMO wave, the reason I'm calling it the coming FOMO wave, okay, right here, you can see I decided to put that in my Twitter handle right there. Coming FOMO wave is because all the people waiting for that $10,000 to $12,000 or even $8,000 Bitcoin, they're going to be the same people. Once it comes around, they're going to FOMO into a Bitcoin at 28 or 30 or 31 if it gets up, when it gets up there. And there's a good possibility. Right now, this is going to be a huge this right here. I hope it does go deep and test the lows, just for the fact. One of the reasons I wanted to break the low and go lower is I wanted all the bears to get sucked right in. Everybody gets sucked right in again, and it could swing back out of there. It would have been great, a short squeeze, and then get Bitcoin to get out of there a little more aggressively. Doesn't look like it's going to happen. It's going to come down, but the closer it gets to there, in my opinion, the better. Because all those people out there, bear market rallies over, it's over, and then it just flips, boom, and gets out of there, guys. All right, guys, that's the end of my YouTube video. If you made it all the way to the end, drop a like, hit the subscribe button. Peace.